Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, June 21st, 2022. We'll do a brief update here on time permitting. I'll cover some other things, but the main thing I want to cover are the equity markets, and I'll make another mention of Bitcoin. Both of those I mentioned earlier today. And just again, if the video I can get it in short enough, I'll just cover some of the other recently highlighted trade ideas that I've covered in the last couple weeks here. All right, so first and foremost, let's start out with the equity markets. I was as I said last week leaning towards I was long and looking for a rally and looking for two things to happen last week. One was a break, and I had color coded these levels about that 11, I called it 111290. It says 11288.93. Remember, there's a 0.93 NQ's trading quarter point increments, so that rounds up. It's again 11290, and that was checked. We took it out. We took out the what I just drew here. The downtrend line gives you that bullish falling wedge, complete with your positive divergence, which you would want to see under a wedge. And then finally today, a breakout of the 11,535 level right there. And that is, so what you have here really two key levels being regained, two former support levels. You have this level here we were dancing on, we broke down but recovered it, so that in itself gave us a potential bear trap. There were undoubtedly some short sellers that jumped in there on the break of those recent lows, and some longs that got shaken out, what I refer to as weekended longs. And then you also had a major reaction low right here. Remember when that was taken out, just walking through the why I think these levels are significant. So you had that major reaction low there. Then you went and tested it here. You danced on it for a while, and we broke it. Once broken, we back tested it there. Tried to recover, got failed pretty impulsively, but now we've recovered it again. So yeah, look, you might say, oh, that's a lot of moving through, and it is. There's a lot of whipsaws. It's just this market nowadays. Volatility is high. Here's a potential trend line to watch as well. And the way it works now is you still have, we're not out of the woods yet by no means. The primary trend is bearish. This is near-term stuff, 60-minute chart, and we're looking at an hourly chart. I'll get to the daily charts in a second, but here's what we have coming up. See these three lines here? Runs from about 11,700 up to about 11,865 or so right there. And that is what I call a resistance zone. We had, of course, the bottom of it, there was pretty good support. That's a big number. I'm even going to color that up yellow. That's what I've been doing lately to the significant levels to watch. So we're going to color that one up. Again, it's just a hair over 11,700. And again, that's important because you had some reaction lows there. Brief, remember that whipsaw? That's when I was in Maui right there, and then we recovered it, held those lows, and then we had a back test, a rally. We had a gap down right here, and then a rally back here. So it's really more of a resistance zone. In the way I look at it, if we can power on through here, hard to say how that's going to happen. We blast on through because I've seen nothing but bullish action since late last week and so far today. But this will just be, how I do things, that they're check marks, for the bullish or bearish case. In this case, I'm currently a near-term bull in long, so I'm looking for these additional check marks to add to my position or to solidify the case for a more significant, more substantial rally. And as the arrows I've been drawing will take us up at minimum up here, I think, to that 12,452 level. And just to quantify it for you from where we're at right now, try not to move that line. Let me grab here in the middle so I don't move that horizontal line. I'll stop a little shy. That does the trick. That's about a 6.5% to 7% rally from where we're at right now. So again, the odds just increase if and as each of these levels, especially the top of that range. But the big one, again, I think is 11,704. We take that out, and maybe that next level above it, about 11,800. That's where I think I would say you have very good odds that we're going to have that next thrust up to that level. And remember, this is near-term stuff, 60-minute chart. at that point, and even now I'm watching, but we start to turn our focus to the longer term chart. This is just a 60-minute chart, again, a QQQ, just showing you that bullish falling wedge breakout. I know I cover the futures a lot, and I know a lot of you prefer ETFs. I understand that, but remember, the futures are not only my preferred trading proxy, but also a way to gauge, see different reactions, different support, resistance levels, trend lines that form in the Globex session. You know, the futures yesterday was Juneteenth. Markets were closed, obviously, but the futures were trading as they always do. They opened on Sunday night, and then they were trading yesterday. You know, they were closed part of the day, but they've been trading. So when you look at QQQ, here's how we closed the week at the bottom of the of this 60-minute wedge, and then we gapped up today. So you know, QQQ or an ETF trader had no choice but to chase the gap up. They might have been waiting, not wanting to buy a gap that was, well, I don't know what it was in percentage terms. It was well above 1%, almost 2, yeah, 1.5% or so. And we've done nothing but build on those gains so far. Whereas a you know, futures trader, there were some shutdown periods, of course, you know, over over the weekend and in and around that holiday yesterday when the stock market was closed. But again, the futures kind of do their own thing here, and so there it is. You can see it's pretty continuous trading since the breakout of the wedge, then the breakout of the 11,533 level, and then that's where we're at now. Okay, so there you are. You're up to date on the markets. And hey, anything's possible. Again, when we look at, let's look at these gaps right here. Let's look at QQQ. We're back right now to the bottom of that gap right there. Let's jump out to a daily chart. So here's the bigger picture on the daily chart. You have these big gaps right here. Remember, last week we almost made a full backfill of that one, and we're now testing the bottom of the gap again. So the level to watch right now would be a backfill and then a break above that gap. If we get that, it should give us a run at the next gap right here, and then that trading range. So this still is what I call a minimum near-term swing target. What does that mean? Well, you know, in the near term, if these recent lows hold, then we could crap out today. And I think I said this yesterday. We'll probably know. We would have known either Friday or early this week. This is early this week. I didn't realize when I was doing the videos last week that we had this Juneteenth holiday. It's new. Markets used to not close on that day. But you can see we're either going to crap out here, but if we can build on this, everything's sort of conditional. In other words, if we hit my near-term targets, what's going to happen? And if we hit them soon, you're going to get the PPO moving up, and then you're going to have confirmed positive, aka bullish divergence on the 60-minute chart. By confirmed, I mean I like to see the PPO make a bullish crossover, and in doing so, put in a higher low. Right now, there's a potential for that, but it's a momentum indicator, and it has not made that bullish crossover. So we could jog down, and then the divergences go away. So that's what I'm looking for, and therefore. If you know it's that whole, if A plus B equals C, then you know that whole thing like that, then you have this level here. If we go up and hit that target, we maybe get a pullback, but then that's going to give us some additional bullish evidence here on the more significant daily time frame, and then the meaning more significant than the 60-minute chart. And then so maybe you know some consolidation around there, and then possibly a thrust up. And maybe a run all the way up here to what's still my potential at this point in time. Again, you know me, charts are dynamic, and so is my analysis if I see something else. But this is still my max target, would be another run up to test the 200 days. You have the 200-day. Here, let me turn off all the lines here. This is the 200-day exponential moving average in red right here, and the 200-day simple in blue. It was a simple that capped us there. Both of them pretty much capped us right there. So I'll be looking for at this point in time, again, a maximum move up there. And then there's also this potential downtrend line right here off the highs. Let me show it to you again without all these lines here. Just draw a trend line right here. Not off the November high, but these late December, early January. That's when the S&P peaked. Remember, the Nasdaq led the way, peaking back in November there. So that would be the downtrend line again. And that would be, to measure it out for you, well, roughly... Depends where it comes in again, about maybe 16%, another 16% or so from where we're at right now. Depends when you get there, if and when we get there. No, about 20%. Because here's I got a lot of levels here, and I'm sorry this chart looks like a Christmas tree, but I have reaction lows here. See this purple line at 337-ish? You got a trading zone there. You had a trading zone there. The bottom of that trading zone. We chopped through it a few times here, but there's enough resistance there, and that comes in together with the downtrend line and that 337 price support. Probably let's just for fun throw up a fib on there and see what happens. I'll grab if I can get a clean board. Yeah, here we go. I already have some fibs up. Let's take this blue line. Let's go from the highs down to the lows and turn on all the fib numbers. Edit. Show us all these fibs here, and let's just see where that comes in. So there was my level, and I hadn't done this previously. This 50% Fibonacci retracement, again, what I just measured is from the all-time high in the Nasdaq 100 back in November to the recent low, and there's that 50% Fibonacci retracement line right there. And I don't know what's happening here. It won't draw. There it is. That is exactly that level I just gave you, those recent lows of that trading range and this one, to the button. So does that mean it must happen? No. But again, I've said this 100 times. Never ever fails to amaze me. I always put my price resistance and support levels first, trend lines. Then I add the fibs, and the fibs, key fibs, will very often line up with price support and resistance levels. And so we are in my primary, thesis here is that we're in a bear market, and I'm looking for another bear market rally. We've had a couple so far. This one could be a little bit bigger, and that would be an ideal point. You have the 200 days, you have price resistance, and Fibonacci. So there it is. So if you're looking for hey, okay, Randy, all right, I'm going to buy in with you. I'm on the same page. I think we're going to rally. This is easy right here. Well, what I mean by easy, here's what I'm going to get. I'm going to keep this very simple. I know I throw out levels and I talk about support and this and that. Keep it simple. You could go long. You're still right off the recent lows. Last week, as I mentioned, was I think a good time to start building long positions, and you would already be profitable on this 3% rally so far today. But let's just say you didn't do that. But now you like what you see. You're waiting to see. You didn't like the 3-day weekend. You can go long here with a stop not far below. The risk reward is very, very favorable. So let's say you gave yourself a 5-6% stop, and you're targeting that level there. You're talking about a 21, or about a 20% rally. That's a nice, that's a nice risk reward ratio there, right there. And that's what you do. You don't overthink it. You take your position. Set a stop. I like those OCO orders. I talk about them all the time. OCO is one cancels the other. Some brokers call them OCA. One cancels another. It's the same thing, and all it is, it's an order consists. Make sure you set it good to cancel. Don't do a day order. The order will cancel at the end of the day. You have a stop loss wherever you want. Let's say right here, and oh no, that was my target up there, my max target, and a sell limit right there. And you can set that order and let it run, or like I like to do is you can try to, as an active trader, game the squiggles along the way. And in other words, something like this, pull back there, come up there, and then down. Hopefully that didn't get cut off the screen. And again, that's one potential scenario. It's kind of my primary right now. But here's the thing: if we do this, and this week we close down, we take out the lows, we take out the divergence below, I may very well be back short. I'll almost certainly have lost a little on the longs that started accumulating last week, and added to today on, because again we've had some check marks already, and that's it. So stay flexible. The primary trend is bearish. Never trust a bear market rally. I don't mind trading them. I'll trade them all day long. I love trading them. And every now and then, one that looks like it's going to materialize doesn't get sold into, because remember, the trend is bearish and has been. And so therefore, bullish setups, bullish divergences, bullish wedges, and other bullish chart patterns tend to have a much higher failure rate than they do in a bull market or a primary bull trend. But with that being said, I think the evidence in the charts are pretty strong right now, indicating, like I said, that the risk reward it remains skewed to the long side. It's more favorable to be long right now than short, and that has to do, among many things, the fact we hit my third price target on QQQ and the indexes, and so far we're bouncing, having an initial reaction. And if we go down, then my next targets, I have the trend line just below, and then my final max target, which I still think gets hit. But again, it's a matter of how do we hit it. Do we rally up here, then go down? And that's the way I'm leaning towards as of right now. Okay, enough on that. Qs, more bang for your buck. I'm not going to go over the S&P 500. I think the Qs will outperform. In a market rally, you're going to see people coming in and buying those beat down market leaders, Amazon, Facebook, Microsoft, and all that. So I do expect the Nasdaq 100 to outperform the S&P 500. If I'm correct. Next up, I'll hit on Bitcoin. Told you guys this morning when I got that post out to you, I mentioned that Bitcoin was breaking out in the 60-minute charts, and I've been eyeing this one recently. Even threw it out as a long back here, and that didn't pan out. We had a breakout there that tried to break the trading range, failed, and then took out this little uptrend line here and then gap down. But nice, look at the volume. See, one thing to look at is see this volume right here, that huge spike in volume. That is indicative of a selling climax. A selling climax is when people throw in the towel. Here you can probably see it well, and you should look on the daily chart as well. This is GBTC Bitcoin Trust. Again, this has the potential to be a selling climax where everyone just finally capitulates, last of the weekend longs puke up their shares, can't take the pain anymore, and that's a good thing from it's indicative of a bottom because then you've washed out those weekends. You've got your diamond hands, they call them, people that are going to go to the grave with their Bitcoin, even if it's worthless, they're never going to sell, and then you've got the people that are not, diehard fans. And here's potential targets. You have a gap right here. Number one, let me just highlight targets for you. But on all the levels populate here. Okay, I'll leave it there. We'll leave it on this chart. You have a level right here, max target, which is, zoom in tight. I put a second line there that kind of messed me up. Let me delete one. About 2240 right there. But before then, you also have a gap to contend with and potentially backfill right there. So the bottom of the gap would be the first resistance around 1550-ish or so. Backfill the gap, but you also below the top of the gap. Remember, the top of the gap is the bottom of this candle. But you have pretty good price resistance there, about $17.90. I'll call it about $18. Let me round that off. Make that an even $18. People love round numbers. That 17 really doesn't come into play much anymore. I'm going to tune that down a little bit here. There you go. Okay, so there's potential targets, and let me show you on the Bitcoin futures, BRR. This is what I was talking about this morning. The breakout. You have the downtrend line here. And most importantly is this divergence. This is strong positive divergence. We did have some divergence there, little divergence. It didn't pan out, but we have even much larger divergence now. And then you had a breakout here, and then today a breakout of that 21,318-ish level. So this needs a hold. If they can build on these gains, my first target on, and again, this is BRR, Bitcoin Futures, or you can trade the smaller one, MBT, the micro Bitcoin contract for futures. 22,828 roughly right there is my next target. And then if it can break that, I think it would really run. At that point, I think you'd see a lot of short covering. And then Bitcoin could rip up here. You got a gap to contend with, their target right there, bottom of the gap. And then the big level here, I'm going to color it up for you right now. Let's make that yellow. So let's just say this is an ideal near-term swing target, and then more importantly, or as importantly, and probably what would be at this point in time, if it's hit, my final max bounce target. If I'm still long Bitcoin at that point, I'll probably take profits. And I'm trying to grab that line. It's hard to do. All right, I can't do it. It's not letting me pick it. It's being finicky right now, but let's draw this downtrend line for you right here. And there it is. So that's going to come in around this, that yellow line anyways. What do I mean by that? Well, not going to go straight up. It takes time to get there. And so we're looking at if we can get a sustainable rally here. This could just be just a little blip, counter trend bounce right now. But you're looking at about a 32% from where we're at right now, 32% more, maybe 33% more upside in Bitcoin if that sticks. As I commented last week, Bitcoin has been a risk-on, risk-off asset. Both Bitcoin and the markets topping last around the same time, the Nasdaq and Bitcoin last November, and they've both been in downtrend since. So they have a high positive correlation right now. Therefore, two things. Number one, consider this not a very diversified trade. To be long, to an extent, to be long the stock market right now or bullish the indexes is to be bullish Bitcoin because of that correlation. But more so, again, so if I'm right on the bounce in the markets, then we're going to get a bounce in Bitcoin. And therefore, Bitcoin's more volatile. You have a potential for a higher gain in Bitcoin, higher gain potential. But that cuts both ways. I talk about beta adjusted positioning sizing. You don't put as much in Bitcoin as you would put into QQQ or Nasdaq 100, however you trade it, futures or ETFs. And then that's it. You know, it goes along with if the Nasdaq 100 is going to bounce, the market leaders will, and the same ones I liked before, such as Amazon, one of my favorites back here. We got that 23 or so % bounce, got out. And now, you know, as I mentioned, that was a good one last week, and still moved off a little bit, up about 3.3, another 3.3% today. But these are the names. They'll probably rally again and maybe make another run up to. And if it can take out that gap right here, then it would hit that next target up there about 135. In change, and maybe the 200 days might come in at that point in time. So I don't want to get ahead of myself, but as of now, you know, if I was long and bullish last week, I'm more long and more bullish this week from what I've seen so far. But again, I cannot impress us enough. We are not out of the woods. There's plenty of overhead resistance and some more check marks needed to say with a pretty high degree of confidence that we may make it up to those longer term swing targets. Otherwise, this is just another head fake, and maybe we crap out and then go on down and make a swift move down. Again, if these recent lows don't hold, like I said, my best guess is it's going to be a pretty quick move. There's going to be a lot of selling, final capitulation type and forced margin selling that could take us down pretty quick to my final target. That is not my preferred scenario, but is absolutely certainly one that I'm not going to stay long throughout, and most likely I'll be able to capture, if not all of it, definitely not all of it, because it'll take me a little while to reverse back, but I'll at least want to hopefully be able to capture some of that if that time comes on the short side. And then, like I said, that's as of now, unless anything changes. And again, conditional on the charts confirming it at the time, that if we get down to my fourth and final target, whether it's this week or 8 months from now, that will be a pretty aggressive load the boat long for trend trades. But again, there's other things I need to see to do that, to be aggressively long there if we get there. And that's how the S&P looks, how the other sectors look, key stocks, what's going on in other asset classes as well at the time. Okay, quick update on natural gas. I got a chart out to you today. This is a target I've been has been for a while now. My final target. We hit it with near impunity. Look at that. Well, yeah, it's hard to see. You have to zoom in, but that was a big level. 653 here on this 60-minute chart. To me, it was a big level, very well defined. And again, I always say this: you don't cover. I'm showing you actual support levels. So your buy to cover order should always be a little bit above that. And so for all intents and purposes, it was a near perfect tag. Remember, all eyes are going to be on, if that's what it was, the actual level. You know, myself and others are going to say, well, I'm not going to hold out for 653 in case the buyers step in early. And I think the low was, gosh, right a hair below that. Actually, I'm looking at another monitor. The low was about 655. So close enough there. And now you have this. So we bounced so far. It's been a nice, good for a reversal. I had OCO order set to cover and then reverse there, and that's what I did. So now I want to just show you if you're trading a bounce, if you covered, hopefully you did. Uh, you have resistance right here at about 6,851, and then above that about 697. You also have this downtrend line which forms a bullish falling wedge, and you have positive divergence. So right now, as I made pretty clear, I think when that final target was hit, it was a good time to cover. The whole drop since this last divergent high, and I've had multiple short entries, even started getting in early on this one, but then the last one, as I mentioned, that was a 30. Trying to see the lines, 32% drop off that divergent high. And the last time I really harped on, I said this was to me, a golden shorting op right here. Very objective. That was very, very well-defined support that was taken out. We bounced back to it. Support once broken becomes resistance, and that was good for whatever it was. I told you about 18%, I think, drop from there. Just what was that on the 16th? So just a week ago. You get 18%. Get in, get out, take your money and run. You can do 18% a week. That's what swing trading is all about. You only have to have a few of those, a year to have a good year. And with natural gas, you're not going to win them all, but you can get those time and time again. It's a volatile little sucker. So fewer commodities can put such large profits in your pocket in short order, and it can also take it away. So again, use a little smaller position size on natural gas than you would on many other things. And on a related note, crude oil. Crude oil, just also another beautiful trade. Big, nice, clean, divergent high. This is the 60-minute chart we're on here. Had this downtrend line there. But this was our initial entry here on the break right here in this short there. So we hit the first target, we bounced as expected, T1 hit. Then we went on to hit the second target, bounced. Then we went on to hit my top of my third target zone right there to the button, bounced. Then went on down to the bottom right there, was hit. And I added this on June 14th, and next target here, which again would have technically been T4, and this makes that T5 down here. And we hit T4 to the button. And again, gave you, this is swing trading. This is why I have multiple targets. Gave you an opportunity. It was good support to cover your short and or reverse to a long. And is this bounce over? Probably. We bounced back to the top of the T3 zone right there, and now we're getting rejected pretty impulsively. So that should open the door for a move down to my final target, T4, which you need to zoom out a little farther to see. It's an uptrend line that actually comes way off to the left of the chart here. It's a long-term primary uptrend line, and there's also price support there, about 100, just over 100, about 101. So that remains my final target at this point in time. Okay, I'm going to wrap it up here. I'll just say, you know what I'll do. I'll get to the other things in another video. I try to do these videos and any front page posts on things that are timely. There's still a case to be made to be into bonds, but I'm not as crazy, obviously, because if the stock market continues to bounce, that's usually a headwind for bonds because it takes away that flight to safety bid. So really not, I made the case you could be in bonds and somewhat right now. And if you want, it's not a bad idea to be hedged. If you are expecting more downside in the stock market, or not. Let's say you're long. I'm sorry. If you're expecting more downside, I didn't mean to say that. If you are currently long equities, the Nasdaq 100 QQQ, you could have treasuries as a hedge in case the market all of a sudden turns around, craps out, takes out the recent lows. You should see probably a surge into treasury bonds with that flight to safety bid, plus the fact they have a constructive chart right now. Other than that, if you want to just pure play and trade it unhedged, bonds, like I said, are probably going to grind around a little bit here. And then that's it. Let me wrap it up right now. I'll get updates on the energy stocks and coal stocks in one of the follow-up videos later today or so. This has been Randy Finney with Right Side of the Chart. Have a great day.